You like to comment on Pavan's comments also? And on what Bernard said. So let's, and please indicate who would like to put questions. 1, 2, 3. Okay, we have a first round of comments here first.
I have a few general things about partial or compromise solutions. You said yourself you had a 40% requirement and it was whittled away to 25%. As soon as you start taking these halfway solutions, that's exactly the way it's going to go from then on. It's not going to go to 100, it's going to go down because the interests are arrayed against it from the financial system. So I think it is dangerous to start with compromises when you know it would be good to go the whole way. And so I hesitate to advocate that kind of thing. Another reason is you want your government to be in the optimal shape, the best possible shape it can be when you first introduce a system like that, because people are going to have doubts about it, and people may even do very irrational speculative attacks on a currency like that, even though this government is strong. This government has just repaid all its debt. This government has just really strengthened the economy. There may still be speculative attacks. And if you go all the way, this government is in the best possible position it can be, the strongest fiscal position it can be, removing as many doubts as possible about its ability to cope with people who don't like this kind of system. That is my thinking. And as far as Bernard is concerned, Bernard's scheme is concerned, I think I agree with some of it. As a traditional monetary economist, I've been very reluctant to allow this into my system, into the model that I built, because then the mainstream guys are going to scream even more. They're already because they're going to try to find some fault with what I'm proposing here. If I'm saying I would also allow parallel currencies, I would think that's a good idea. That will open me up to more criticism, even more criticism. But I think some of what Bernard said is very good and very convincing. So I'll think more about it.
So one battle at a time. Okay, may I suggest that those of you who would like to put the question, please come up here, because otherwise it's going to be very, very complicated, because this is web broadcasted. So please, Carl-Henrik, there was somebody there. Huh? Ja, du kan gå runt. Ja, men det visste jag inte. Då börjar vi här.
Yeah, hey. I would just ask primarily to Michael the question about the Roosevelt solution. There was a transition that answered the questions that Ulf Dahlsten put here, and that is the Roosevelt policy to implement a policy that you excluded in your discussion here, to have a solution with a regulated system of the banking and the Glass-Steagall and the full productive credit. So how is it with your proposal? Will it ensure a full productive credit to put the whole labor force into full work with really productive credit?
So, shall we collect a few questions?
Then I need a piece of paper.
Please. Thank you. Carl-Henrik?
Yeah. First of all, thank you very much for a very nice review. In particular, to see those approaches presented at the same time was very nice. Also because you had similar points of view and similar angles by which you attacked the current efficiency of the economic system. What I would like to know is about the interface between the two. And you were both addressing the problem of the business cycle and collapses of the economic system. And I understand from your presentation, Bernard, that complementary currencies have the potential of reducing the amplitude of those business cycles, yes, which allows for more long-term thinking and everything we need for sustainable development. Then you said something that is the question. You said that that's why we need complementary currencies in combination with the Chicago plan. But when I listen to you, and I think I heard you say the same, that, and I think I understand why as well, also the Chicago plan would reduce the amplitudes of the traditional business plan. It doesn't need complementary currencies. And I would like the two of you to elaborate that together in front of the audience.
Okay, we pick one or two more, and then we have Kai and Brian, and we have somebody there, yes?
Hello, my name is Kent Werner, I'm a journalist, and I have two questions for you, Michael. And the first one is, the Chicago Plan, could that be implemented on a national level, for example in the US or in the European Union, or does it need to be a global reach at one point? And the second one is, how does your research on inequality and instability relate to your latest research on monetary reform? Is it connected to each other very strongly or not?
And down there. Yeah. Please come.
Hey, Kai Embren from Respect. I have a question. I understand that all of you have been looking at the history and trying to learn lesson from other crises. And that's one of the questions I always have been raising. Because Sweden, when we created the welfare state from the beginning, we had a very high interaction between the stakeholders to bring down the cost of labor and strikes on the labor market. But today we have another problem. We have a crisis of a planet. But I think maybe that after the welfare state's development, we had an abdication from politicians. We have many people who they went away and was not innovative enough to create models for the new problems. Do you think that it's relative interesting to see how is the political sector the one who have abdicated in this discussion?
Well, an add-on question would be, we have developed a very vulnerable system, that's obvious, a very risky system. And the Chicago Plan primarily asks us to move the responsibility for money creation, etc., back to the governments. Now the question is, can we trust them? What are the risks with doing that? And Pavan, you had an additional question.
Yeah, it is actually, I asked it at the beginning, so I think both of you forgot that I asked it, but I'll repeat it for clarity then. Yes, purpose, the purpose of creating credit, but what about the purpose of taking credit? Should corporations be allowed to take credit regardless of purpose? And I give you one example of that, Enron. If someone had gone and measured the leverage ratio of Enron a year before its collapse, they would have found that it wasn't 1.6, which was industry average, but more like 5 times that much officially. And if they had bothered to check into the vehicles where Enron was housing credit, it would have been even higher. So purpose of credit for the corporation, not just for the lender.
Thank you. And let me add an additional question, and then I'll leave it to you to respond. Namely, I mean, we started this whole series primarily because we were concerned that the economic policy framework, and gradually we also learned that the financial system is not really conducive to sustainability in the long term when it comes to the way we use resources, the way we care for ecosystems and manage them, climate change, etc. And also that increasingly we experience a lot of social problems, ills, where the system seems less and less capable to really cater for them. So the question is, more fundamentally, the Chicago Plan, what would be needed in terms of additional regulation or incentives or whatever to really make those working in the financial system more responsible for the long term, because they are not today. They are not telling us anything about, for instance, the exposure to carbon in their respective portfolios. And I can tell you that most of our pension funds, they are heavily invested, for instance, in tar sand exploitation in Canada rather than in solar energy investments in the longer term. So this is an additional dimension that I would like you at least to touch upon. So who would like to start? You have a number of questions. Michael?
Thank you. Will the Chicago plan ensure full productive credit? Basically, the way you can implement this in many different ways in terms of what you do with the balance sheet, how you use the government's seigniorage windfall gain after the Chicago plan is implemented. And the way I went is that all types of credit that Richard Werner in the UK, for example, describes as unproductive were repaid through the citizens' dividend, which is mortgage credit, consumer loans, and working capital loans by firms, and what remained outstanding was highly productive loans to industry. I'm assuming it's highly productive. When I lent, I made productive loans to industry in the UK, and banks have a very useful function there. There's no question about that. When they concentrate on that, they can do a very good job, and somebody needs to monitor these projects, and it's good that banks are involved there if they do their job properly, and I think that would lead to growth if the money in the economy was channeled to these useful investment projects. And I'll get to your question right at the end, so I'm not going to go there yet. But that would lead to a very productive economy and presumably high employment. Now, Richard Werner advocates, in addition, something called quantitative lending guidance, where the central bank or the government, central bank in fact, sets some targets for banks as to how much they should lend to various different industries. And people, of course, tend to be derogatory about that because you can point to some episodes where that didn't go so well. But he says in the overwhelming number of cases, it actually went extremely well. And the East Asian miracle is attributed by him to a very significant extent to this policy because it was adopted all over Asia as a result of what the Japanese initially implemented, and the Japanese copied it from the Germans pre-World War I. And so he has a wealth of evidence whereby this would be a useful policy. And I would actually like to do some empirical research with him on that. We have been talking about doing that in the future. Next question was...
May I suggest that we address one question at a time, otherwise...
Oh yeah, why not?
Is that okay? Can I speak with this? Yeah. Yes? All right, good, thank you. That way you can keep it.
Yeah.
I'm going to be very brief on that first question, but because there is actually, the study has been done by an economist from the University of Kansas at Missouri called Randall Wray, called Understanding Modern Money. And his key argument is precisely that if government were to be creating currency, as the Chicago plan does, you can ensure full employment without inflation. That's his entire thesis. There's a whole book on that, and it is very convincing, at least convinced me. So, if you want to look into that, I would suggest to start with Randall Wray's Understanding Modern Money, because he's done it, okay, theoretically at least. The data still would need to be proven. So that's my comment on that first question. It's possible he would resolve the unemployment issue.
Okay, I know Randall Wray. I met him at a conference. I do have some problems with MMT. I think some of what they say about the nature of money is not correct.
Fine. Okay.
But on this particular question, that it may have nothing to do with that, so that would be fine. So anyway, thank you for that advice. So now the next question was about basically getting us to spar.
Sorry, may I just say we have around 8 to 9 minutes left. So
yeah.
So you have to.
Okay, then I'll keep it very brief. So do we need complementary currencies? I've had some email exchanges with Bernard about that, and I think it's right, the person who asked the question, under the Chicago plan there would be less need for that, I think, than there is today, because a lot of this money creation power could be used for very useful social purposes by the government. Some of it could be decentralized so that local governments can utilize this money creation power. Etc. But what I've heard today makes me think that nevertheless there may be a role for this. So I'm not against it. So that's all I can say.
No, that was not my question.
No?
The question was that there is inherent...
But we need to rush.
All right.
Well, forget it. Okay. There is inherently a driver for big amplitudes in the business cycle if you create money and there's nothing behind it, right? There's nothing to cover it up. But the Chicago plan would change that. So there would be less amplitudes, not only because governments can direct money to things you need, but inherently so, if I understand you right.
That is also true.
Yeah.
Yes.
So my quick answer to that same issue, I believe that this issue is not just quantity of money, but also the type of behavior patterns that the money system encourages. And any currency with a positive interest rate behaves in certain ways, which is a competitive way, and short-term thinking and all that stuff. So by having different currencies, you actually address different issues, you know, in an earmarked way, okay? It wouldn't solve the problem in Ghent to throw more euros into that neighborhood, because the next morning they're all gone, okay? So it's not just the question of whether the money is available. You can make it canalize specific motivation systems.
Yeah.
I'll leave it at that. That's what I would say would not change with the Chicago plan.
Okay. So the next question was Chicago plan on a national level versus global. I started my academic career working on balance of payments crisis. So the question here could be rephrased: would this country be exposed to a balance of payments crisis if it implemented the Chicago plan going it alone? And the question, and the original balance of payments crisis literature was always saying, what are the fundamental economic factors that would make speculators attack a currency? And it's a weak fiscal position. Under the Chicago plan, the fiscal position would be the strongest in the world. Mm-hmm. Okay? And so this, for purely fundamental reasons, this currency should not be attacked. If it was for irrational reasons, namely that people think this system is so unorthodox, we don't like it because of that, and we're going to attack it anyway, then the question is, how easy is that? And if you try to attack a currency where the banks cannot create the money to cover you when you need to come up with a local currency, you're screwed. Okay? And so that's exactly what Schacht did in Germany in 1923, and he killed the speculators. Okay? And so I think that would be pretty well protected. But there is one other issue. If you nevertheless run into problems during the very initial phase, I think the topic of temporary capital controls is no longer completely off the table for very good reasons. And so you might even think about that. But I don't think it even needs to come to that.
I agree with you. So
done.
You don't have to.
And how does my research on inequality relate to the Chicago plan? There is empirical evidence by Philippon and Reshev which shows that a lot of the inequality that we have seen over the last 10 years came from financial deregulation. That's it. So then for politicians, can we trust governments to do this? So this is sort of attributing this. I really don't like this debate because it's always attributing these nasty attributes to politicians. Politicians cannot be trusted. And people always say, you know, when you do this, oh, but then you're giving all this power to governments. Can you really trust governments? I would ask, why don't you ask, can you really trust banks? Right? And what is the evidence over the last 10 years for that question? All right? And so, and secondly, you know, I think this whole line of argument gets its causation backwards. It's sort of saying the politicians are what they are, and they can change the economic system. I think it's the other way around. I think the economic system within which politicians operate dictates what kind of politician we get. Yeah. And if we have an economic system where politicians have a lot more power with the purse strings than they have today, then there would be a lot more incentive for democratic electorate to look at these politicians very carefully and to be really involved in the political process, because then you know with your vote you can really make a difference because these guys have the purse strings. Okay? And so I would rephrase the question, can we trust the government with control over the money supply? I would ask, can we trust the money supply with control over the government? Yeah. Okay?
And my answer to that question would be, if you have complementary currencies, if either government or the banking system screws up, there are actually alternatives. You have business-to-business systems, which are independent of both of them. And people will start using what they trust. Okay, so that would be solving both problems.
Yes. The fifth question, should corporations be allowed to take credit regardless of purpose? No, so that's quick. Sustainability, what's needed? Additional regulation to make the financial system more responsive to longer term issues. Well, I think this goes back to the whole question of quantitative lending guidance and how you know, what has been the historical experience. I mean, that's what the Japanese did post-World War II. They basically did have a lot of guidance to different industries, prioritizing different industries. The Koreans did the same thing. Now, at this point in my life, I don't claim to be an expert on that question, but I want to do my research on that over the next 2 years.
My answer to that is very simple. Use the Terra. The Terra currency has a demurrage fee, which is the cost of storing of the raw materials. That would be backing the currency. If you use a negative interest rate, which would be basically what it is, you actually, the future becomes more important than the present. On a rational decision making, you automatically have the future becoming more important than the present. So you reverse the whole process that we're currently struggling with. And I happen to believe that we have solutions today for all the problems that exist in the planet. They are not implemented because they are not economically justified under the current money system. Okay? When you have a system which is not a monopoly, it's an additional system, it's a parallel system. Nobody is obliged to use it. But you would have corporations saying, we use the Terra to evaluate our investments, becomes automatically saying we took into account the long-term future. So,
thank you to both of you and to Pavan. I can say that I think this has been a very rich afternoon with a lot of food for thought and a lot of examples that we need not be in this double bind we are. We can get out of it. There are possible ways, other futures. And I must say I particularly liked your comment about politicians, having been a politician myself. But I also must say that in order for that to change, we need in the short term more courage among some of those political leaders. So I think we leave it with that. And thank you to both of you and hope to see you soon again.